There are so many sneaky and tricky nuances to a real estate transaction. It is absolutely mind boggling that we can actually close deals and make people homeowners. Absolutely insane. One of the trickiest and potentially one of the most anxiety provoking pieces in a real estate transaction is that gosh blessed appraisal. Why? Because we have no control over it. The bank, if you are getting a loan, requires a property to have an appraisal done on the property to ensure that the amount that the buyer is borrowing is justified by the price of the property. Generally speaking, a bank will want to see that the purchase value of the property is supported by the appraised value. Now, listen, this is all kind of arbitrary, to be quite honest with you, because the bank or the mortgage loan provider actually hires what's called an AMC, or an appraisal management company. This is a requirement in the lending world based on things needing to be fair and transparent and having an unbiased third party opinion. So, the way an appraisal management company works is they have a pool of appraisers in any given area, and when they get an appraisal request, they put out the bid to the appraiser pool, and the lowest bidding appraiser usually gets hired by the appraisal management company. And then that price, let's say the appraiser bids for the appraisal at $400, that price is then inflated to say $600 and sent to the bank or the lender, and then that cost or fee is paid for by, yes, you, the buyer. So you are essentially helping the appraisal management company profit. Now, the lowest, I'm going to tell you a secret, the lowest value appraiser is not generally the best or most experienced. Now, especially in the Santa Cruz County area where we have such a niche and nuanced market, and you don't have several subdivisions or planned unit developments in the neighborhood. You can literally have a home that's worth $10 million right next to a shack that's falling down. Ocean views are worth something versus rural properties. So you really need an appraiser who is experienced in the area in which they work or the area in which you are purchasing your property. So today, now that you have a little background on appraisals, appraisers, and how they work, today we are going to be talking about what happens if your appraisal comes in less than your contracted purchase price. I'm Shamika Fox, your Santa Cruz real estate expert. I've been successfully selling property in the Santa Cruz area for over 20 years now. I know that's absolutely insane. For over 20 years now. If you have any questions about the Santa Cruz real estate market, if you're considering buying or selling in the area, please reach out. Either fill out the form below, leave a comment, or call me on my phone. My phone number is pinned to the top of the comments section. If you are considering buying or selling outside of the Santa Cruz area, I would love to connect you with a realtor that can take exceptional care of you in your area of choice. So please fill out the form below and I will get in touch with you. Okay, let's dive in. Appraisals are based on a few key factors: location, condition, age, size. Again, in the Santa Cruz area, do you have a view, an ocean view, a mountain view? Are you a rural property? How close to the city are you? Things of that nature, but you will, generally speaking, only use a 5-mile radius to pull comps or comparable properties in order to justify the appraised value. So when an appraiser goes to a property, what they are looking for are comps that have sold within the last 3 months, which is kind of hard in our market because we have had such low inventory and low sales. So comps that have sold within the last 3 months within a 5-mile radius, and then they will make adjustments based on the size, the condition, is there a view or isn't there a view, the age of the property, recent upgrades, structural materials, etc., things of that nature. So what happens then if the appraiser goes out to the property, you have a contracted price of $1 million and the appraisal falls flat and comes in at $900,000? Is the deal dead in the water, or can we save the deal? That's what we're going to talk about today. There's basically 5 strategies or tactics that you should be aware of if you are purchasing a home, especially in an area that is a little bit more nuanced than others and where comps and or appraisals are a bit more tricky or challenging. Super simple example. The sales price is set per the purchase contract at $1 million. The appraisal comes in at $900,000. That difference between the purchase price and the appraised value is called an appraisal gap. And for the sake of this example, the appraisal gap is $100,000. So what do you do with this appraisal gap? Let's take a look at 5 options you have as a buyer when you come upon an appraisal gap. Option number 1, if you have an appraisal gap and the property doesn't appraise at the purchase price that has been negotiated and that you are contracted to purchase the property for, is that the buyer can bring in the difference. So again, let's use easy math for the sake of this example. You are contracted to purchase a property for $1 million. The appraisal comes in at $900,000. A buyer can bring in the difference of $100,000 to make up the appraisal gap and still be able to proceed with the purchase with their loan. This often works in a competitive seller's market where the seller might have backup offers and little reason to negotiate. It's also an option for buyers who have enough cash on hand. You might even be able to adjust your down payment strategy. So for example, if you plan to put 20% down, you could potentially use some of those funds to cover the gap. The trade-off is that you might have to pay private mortgage insurance or PMI. So definitely talk this over with your lender. Make sure you understand explicitly what the implications are. Also make sure that you understand what the implications are with regards to your contract if you are adjusting your down payment during your escrow process. Option 2, when you come upon the challenge of an appraisal gap, is that the seller makes up the difference. So we have a purchase contract that says $1 million for the purchase price. The appraisal comes in at $900,000. The seller says, this is not a competitive market. I don't have any backup offers and I don't have any other options, and I have to be out of this area because I've already purchased my new home where I'm moving to and I just can't take it anymore. I'm going to be willing to reduce my sales price by that $100,000 appraisal gap to bring that purchase price down to $900,000 so that you can meet the appraised value. The lender will love this option because they are now seeing that you're purchasing the property for the appraised value. They feel like their loan is more secure, etc., etc. The buyer is also getting a better deal on the property, but of course the seller is walking away from $100,000. So a seller needs to be certain if that is what they want to do, because sometimes a seller decides that time is more important than money. So if you are a seller and you are making this decision to bridge the appraisal gap by reducing the purchase price to that appraised value, make sure that you take time to consider that decision before you jump in and make it, because that is a big significant difference. Now I am using larger numbers because where I live in Santa Cruz, our median sales price is in the $1.3 million range. Now if you live somewhere else where the median sales price is less expensive, obviously we're going to be talking about different types of numbers, probably more in the $10,000 to $20,000 range versus $100,000 or more range. Option number 3, and I know that this is a popular option and oftentimes people feel like I give a little, you give a little, this is the fair and most equitable option, is that you meet in the middle. So if you have a $100,000 appraisal gap, the buyer decides to increase their payment by $50,000 to make up half of the appraisal gap on their side, and the seller says that they'll reduce the purchase price by $50,000, meeting in the middle. Very equitable plan. Again, both parties have to agree to it. An addendum will be drafted and both parties will have to sign it so that you can proceed. The bank will then approve it and you can move forward with the final purchase of your property. Now, option number 4, this is a tricky option, but it is an option, is to challenge the appraisal. And there's actually 2 ways that you can challenge an appraisal. The first is technically an appraisal challenge, where you scrutinize with a fine-tooth comb whether the appraiser has utilized the most appropriate sales comps, whether they have made any mistakes with regards to the condition of the property. Is there a view of the property, the square footage of the property, if there's any permitted structures on the exterior of the property, etc., etc. If you choose to challenge the appraisal, you will note once you have reviewed the appraisal any mistakes that have been made by the appraiser. And if you just simply do not agree with the sales comps that they used, you will bring in the sales comps that you think are a better fit as far as a comparable property, and you'll have to justify it with a paragraph or two explaining why you think that is a better fit. Utilize and lean on your realtor. Most realtors will have been inside other properties. They will understand the value of these other properties, and they will better be able to explain why they think this is a better sales comp versus the one that the appraiser used. So you can challenge the appraisal. That is an option. The other option, and I've actually personally experienced this, is you can say, I don't want to use that appraisal. I want to get another appraisal. Now, two things to note here as a buyer or somebody who's refinancing. If you choose to get a second appraisal, you will have to pay for both appraisals. The other thing that is very important to understand is if you choose to get a second appraisal, this is poker. It is a complete game of risk. The bank will use the lower of the two appraisals. So if you choose to get a second appraisal and the second appraisal comes in lower than the first appraisal, they will throw out the higher appraisal and they will use the lower appraisal. They do not combine them. They do not average them. They do not go with the higher appraised value. They simply go with the lower value. So if you want to get a second appraisal done, note that you will be paying for two appraisals, and also note that you will be using the lower of the two appraisals. Okay, that's very important to understand. Option number 5, if your appraisal comes in less than your contracted purchase price when you are purchasing a home, is to cancel the contract. Now, if you go with option 5 as a buyer, please make sure that you understand contingencies. If you have waived your appraisal contingency and you try to cancel the contract based on the appraisal contingency, your deposit can be liable. If you have not waived the appraisal contingency and you do in fact have an appraisal contingency in place and you choose to cancel the contract because the appraisal did not come in at the value you needed in order to secure your loan and move forward, you can cancel and you should get your deposit back. Oftentimes, the seller will want to see the appraisal so that they can have justification in the cancellation of the contract. So do be prepared to share the appraisal with the seller. You are not required to share the appraisal, but sometimes it is just the path of least resistance to provide the appraisal that came in under market value and then to provide cancellation of contract. Now, something that I have experienced, and this is actually something that is interesting and you should think about, is if you are ready to cancel, this is actually a good negotiation tactic. If you are ready to cancel because the appraised value has come in less than the contracted purchase price, you provide the appraisal to the seller with the cancellation of contract. Sometimes the actual seller will come back to you and say, please don't cancel, I want to sell it to you. And at that point, because you are basically strong arming the negotiation, the seller may actually come back and renegotiate with you. So there you have it. Those are 5 strategies and tactics to deal with an appraisal that comes in less than the purchase price. I hope you found value in this video. I hope you are able to successfully navigate any appraisal challenges and issues that might arise when you are purchasing your dream home, because the last thing that we want to do is have an appraisal stand in the way between you and your dream home. So in conclusion, if your appraisal comes in low, you have 5 options. If you have ever had an appraisal come in low, please comment below. Let me know what you used as far as your strategy. Did you cancel? Did you renegotiate? Or did you proceed with bringing extra cash to the table? I would love to hear from you. If you have any questions with regards to the Santa Cruz real estate market and you're considering buying or selling, I would love to be the realtor of your choice. Fill out the form below and I will get in touch. If you are considering buying or selling real estate outside of the Santa Cruz area, please fill out the form below and I will connect you with another fabulous realtor in your area that will take exceptionally good care of you. I hope you're doing well. I hope you have a fabulous day. And until next time, I'm Shamika Fox, your Santa Cruz real estate expert. Make it a great day.